Welcome to Thoughts on the Market. I'm Jonathan Garner, Chief Asia and Emerging Market Equity Strategist at Morgan Stanley. Along with my colleagues bringing you a variety of perspectives, I'll be sharing why Japan equities could be a key part of the bullish story in Asia this year. It's Thursday, May the 25th at 10 a.m. in New York. Japan equities have rallied substantially during the current earnings season, and we think further gains are increasingly likely. The theme of return on equity improvement, driven by productive capex and better balance sheet management, is clearly finding traction with a wide group of international investors. We first introduced this theme in our 2018 Blue Paper on Japan, where we described a journey from laggard to leader, which we felt was starting to take place due to a confluence of structural reforms such as the Corporate Governance Code and Institutional Investor Stewardship Code, as well as changes in company board composition and outside activist investor pressure. Japan has a formidable roster of world-class firms, which we have identified as productivity and innovation leaders in areas such as semiconductor equipment, optical, healthcare and medtech, robotics, and traditional heavy industrial, automotive, agricultural and commodities trading, specialty chemicals, as well as more recent additions in internet and e-commerce, many of which sell products far beyond Japan's borders. For the market overall, listed equities ROE has more than doubled in the last 10 years and is now set to approach our medium-term target of 11 to 12% by 2025. Company buybacks are annualizing at a record pace, and total shareholder return, that is the sum of dividends and buybacks, is running at 3.6% of market capitalization. Yet, Japan equities are still trading on only around 13 times forward price to earnings. And Japanese firms have a low cost of capital, given the country's status as a high-income sovereign, with membership of the G7, as highlighted by Premier Kishida hosting its recent summit in his hometown of Hiroshima. An additional near-term catalyst for Japan equities is that the yen is tracking significantly weaker year-to-date at around 135 to the US dollar than company modeling, which was for around 125. Given the export earnings skew of the market, this is a positive. All in all, Japan equities are set, we think, to more than hold their own versus global peers and be a key part of a bullish story in Asian equities this year. Thanks for listening. If you enjoyed the show, please leave us a review on Apple Podcasts and recommend Thoughts on the Market to a friend or colleague today.
The preceding content is informational only and based on information available when created. It is not an offer or solicitation, nor is it tax or legal advice. It does not consider your financial circumstances and objectives and may not be suitable for you.